Hey everybody, this is David Skrika. So this is our stock chart of the day for uh, April 1st, April Fool's Day. And okay, it's always a weird day on Easter Monday. Is that some government offices and some things are closed, and like I know in Australia, for example, it's a 4-day holiday, and then some things are open in other places. So it's a strange holiday. It's a weird holiday, and because obviously the markets are open, and it's been a really interesting day in the markets. Now, maybe it's somewhat interesting because it's an illiquid Monday that's somewhat of a holiday. But first of all, we're going to talk about gold, and um, we can see that the GLD is up 14 or 140. That's equivalent of about 15, dollars in gold, and you can see that this breakout continues. Now, I think we are getting close to a short-term consolidation. My target was about 2,300 in gold, where gold could see maybe a 50 to $100 kind of quick. But I'm looking at that being very short term, like being a few weeks, maybe a month, and then get ready for the next move, which will be significantly higher. And part of the reason is if you go look at what happened to gold in 2019, I'm going to go back 10 years here, you're going to see a similar chart. When gold broke out here, and this was the breakout from about the 1400 resistance, went to 1550. It went to about 1450. It took a few months actually, and then it continued higher. So I think we could be nearing this kind of breakout, which I would consider a short to into, sorry, this kind of consolidation after the breakout, which I would consider short to intermediate term. But that's okay. It gives you chances to build your positions, etc. What I find really interesting about today is we're seeing the junior stocks really kind of move. Um, So you can see that, okay, it looks like nothing on a longer term chart, but we'll get a 1 year chart where you can really see it is that, the CDNX had this, like the venture, which has a lot of junior mining stocks on it, had this move higher here and then pulled back quite a bit. Now is above the 200 average and moving and making and moving higher. And I'm seeing this. A lot of these little stocks that I own that have done nothing, even with this breakout in gold, are starting to move. Like Inco One today on pretty good volume is up over 22%, getting right at that 200-day moving average. And Goldshore, whose CEO I had on recently, you can see has now kind of broken this resistance in the 15 to 16 cent area in a 17, 18 cents today. So we're seeing these kind of stocks move here. And again, I had not really seen this yet on the gold move. And what's interesting too is I'm going to talk more about the dollar and interest rates in the next two videos this week. We're seeing interest rates. I still think interest rates on the long term may be headed higher. My feeling, I've kind of shifted now. Like if we go look at the CME here and what the Fed is going to do, and we'll talk about this more in the interest rate thing, but I just want to do it quickly here. You can see again these. I kind of think now we might get one or two rate cuts, and then the rest won't come to fruition because I think inflation is going to start ticking up. There was very strong manufacturing numbers today, so the economy is not really slowing. So I don't really see the need for the Fed to be doing a lot of interest rate cuts. Like let's look at June. June is now only less than 60% chance of a rate cut. And we go up to September. September really has a one full chance of a quarter point. And again, it's 50-50. So I got a feeling what's going to happen is I think we could see a one cut over the summer. But if this stock market continues hot, if inflation continues, maybe perks up a bit. We got oil rallying again today. I talked about cocoa on the weekend. It looks like a lot of the agricultural commodities are starting to, commodities are starting to firm up. Got a feeling this could come out of the market, and that's where we could get our destructive correction in the stock market. And maybe that will lead to rate cuts after that. But I got a feeling that until something kind of breaks, we may see this one rate cut maybe over the summer but that's about it. Now, I think that gold is going up for other reasons. Like the dollar's strong. I think gold may be anticipating this issue I talked about with all this debt hitting the market. With if interest rates go higher, that hurts the deficit even more. So I think gold is kind of anticipating maybe a debt problem, inflation problem, not going up in anticipation of rate cuts anymore. It's always hard to know why things are going up. Look at when you're on the long side of a trade and gold trade, especially in gold stocks, has not worked for a while. And when it is working, you really don't want to fight it. You just want to just kind of go with the flow. Don't fight the tape, as Martin Zweig always said. So this is the GDX. We can see we got back up to these December highs. We were up to over 32 at some point. See the high today was 32.40. We're just under 32 now. So again, this could correct a little bit before we break that out, but it could break out. But if we kind of look at the GDX going back 3 years, you can kind of see if we break this kind of 32.50, that the next level of resistance would be about 35. And then after that would be the highs, but to kind of this double high they hit in 2021 and 2022 at 40. And of course, 40 is 30% higher from where we are today. So we'd all be pretty happy with that. So and look at I'm gonna go back to Inca One just to talk about it because I talked about it on the weekend. And again, full disclosure, I own it. It is a sponsor company. I think if we look at Inca One here, this company, you got this base here. I think if it breaks about 15, that breaks both the 200-day moving average and this kind of resistance that's built up for a few months, really since about December of last year. Then we can get back into the low 20s, and if we can break this 24 or so area, then you're talking there's really nothing to about 40 cents a share. And I've noted in the past, if they can secure this loan to go into full production, which will then should make them profitable. I go back to what Dynacor did in 2010 when Dynacor was in this similar position here. You can see Dynacor's had another huge jump here because their profitability is doing so well, and the company. And you can see Dynacor in 2010. We're gonna go back 15 years, so we can see that. So Dynacor in 2010 basically went into full production, and gold had a huge move in 2010 to 2011. And you can see that Dynacor went to about $1.75 a share from about 15 cents a share. So I really think that Inca One can have its move. And remember, the only reason that Dynacor had this big correction here before moving higher again was because gold prices tanked in 2011 and 2012. And you can see that even actually the rest of the gold market was weak into 2015. Dynacor held up and then, of course, hit new all-time highs in 2016. And so, like, the only reason I use Dynacor is the only other stock that has this kind of, thing. So, and this is what can happen. I've seen this happen so many times when the market just turns around. I remember being in a stock called Northern Dynasty. Now, it's kind of a dead duck now because their Pebble deposit up in Alaska has kind of been squashed due for environmental reasons. But back before that happened, in 2003, when I was in the stock, this was actually one of my first recommendations that did really well. I can't even remember. There was their company that used to track newsletter performance, and I was like second or third in their it's like hundreds and hundreds of newsletters. And it was because I was just in junior miners. It wasn't like some genius or something. And I had stocks like this. Yeah, I remember I recommended Dynacor run. I didn't even get in at the low. It was like 80, 90 cents. And you can see it ultimately went out. And I didn't get out the highs too. I think I got out here like this kind of $8 range kind of thing. And you can see it eventually went to almost, it went to over $20 a share ultimately before collapsing because now that this mine, the permitting has been revoked. But just this is what can happen. Look how quickly this happened. This essentially happened in a year because the gold stocks turned up and gold turned up and the juniors got a bid. So I know it's been frustrating, but I'm starting to see the early stages of that. Like I said, we're seeing this companies with the larger resources, the Gold Shores, or with that has some kind of revenues and production, the Inca ones, they're starting to move. So I think that's a very, very positive phenomenon here for the gold and gold stocks. And that's basically all I got to say. So I hope you enjoyed the stock chart of the day, but it looks to me like, I don't know what gold's going to do shorter term. So that 2,300 level was kind of the level I was looking at. And we're nearing there, but I think we are still in this early stages of a breakout here. And I think what we're seeing is these juniors, especially the larger ones that either have productions or large resources. Juniors are all small, but they're the larger of the small ones are starting to kind of move. So I hope you enjoyed this. The next few days, I'm going to talk about interest rates and the dollar because I think those are interesting right now at the moment. And everybody take care and have a great Monday.